Hey everyone, this is Michael Bengiat. This is the Stock Picks weekend video for July 16th, 2022. So here's our disclaimer. Please pause the video and take a look at this so you understand it. So we're going to go ahead and just talk about the current market environment, which is slowly improving. And then we're going to take a look at our watch and ready lists and the stocks on those, and then our portfolio. In fact, we're going to start with the portfolio. But let's start right now with the overall environment. So we're still in the yellow environment. The best trading strategy is swing trading. So we're looking to take shorter term profits. We're just not getting any real big moves in stocks. So if you really get a 10 to 15% gain, it's probably best to take that, or at least take most of it. Maybe hold a little bit for a longer move. But for the most part, for about a year and a half, the longer moves just haven't been happening. So overall, but the market is trying to. We're looking at stocks. We're not looking at the indexes. Indexes can kind of do what they want to do, but we're always looking at leading stocks, and they are starting to act better, especially healthcare stocks. And you're going to see we have a lot of those. The vast majority of the stocks are all healthcare stocks. So the thing that's, and we actually own two of them now, one in our growth portfolio, one in our long-term outperformer portfolio. The problem is that it's been pretty volatile with going on, and a lot of them are gapping up into the buy zones, or they're gapping out, straight through the buy zones, things like that. We don't like to buy gaps. That tends to just make the buying riskier because gaps tend to be filled. Not always, but it's common. And also you're buying it just farther up out of the buy zone than you'd like. And so you also have more of a risk of a pullback and kicking you out at a loss. So that's the current environment. So let's go ahead and take a look at, the first one is Eli Lilly. So this we just bought for our growth portfolio, and it basically closed 10 cents higher than what we paid for it. So we had a little bit of a kind of a pullback from its high during the day, but nothing major. There's nothing wrong with that. And you can see here, it's been quite a volatile. Here we have we had a cup that formed here, a flat base. Very common to have a flat base after a cup. And then we had a breakout that failed pretty strongly. Didn't almost undercut this base, but it didn't. Just came ripping back into the buy zone, gapping again. And then just forming a base. We started watching it here because it was looking constructive. We had a strong day on Thursday, and then we gapped up just a little bit, not enough to tell us to say, well, let's forget about that, but enough to make us a little cautious. But anyways, we ended up buying it. It did go higher after we watched. It actually came above our buy zone, then kind of went down. It was floating just below it for a while. We put out our alert. In the market, the price did break back above, so we were actually filled. And but it's all looking pretty good. I mean, look at this very strong RS line. Look at the outperformance. We have an RS rating of 98, and you can just kind of see this black line is the S&P, and look how this is just solidly trending down, and this has been acting completely opposite. Even when the market, look at this, is going down. This was just not going down, making here's a low. Higher low, even higher low. So this is the opposite of what the S&P is doing. So these are what the leaders are doing. And it's always what we're looking for. High RS. We're even now in industry group 6 out of 197. So it's just showing that money is flowing into this area. So it's all looking pretty good. And but we'll see. You never know. The market sends a change on a dime. So the other one we have is Humana. We bought this one earlier. This is in our long-term outperformer portfolio. We got it at 479.20. Let's see. Yeah, I think we bought it. I don't have the date here. I think we got it. I don't know if we got it on this day. We may have been almost stopped out here. Our stop is. Let's see. Yeah, because our stop was 459.40, and this went down to 459.44. We got within 4 cents of getting stopped out. So that was kind of lucky in a way. And then but came straight back up, another sharp sell-off, gapped up again. It's difficult, but look, we have very nice volume though. Look at the volume on this. So just glancing at this, we have had 3 accumulation days in the last, call it month, and really one more or less pretty minor distribution day or selling day on high volume. But even this day, it's important to look at how the stocks are closing. So this one actually ended up closing in the upper part of its range. These charts show you it's 77%, so real strong. Even this day where it kind of gapped down, came and it closed it up in the 82% range. So it's all looking real good. So those are our 2 positions. We'll hope they hold. And let's move on now to, let's see, our ready list. So the first one we have is one of the non-healthcare stock, and this is a company called Stride, ticker is LRN, and they're in education. They provide online curriculum to a lot of K-12 students in 30 different states. This one is, if you've been with us for a while, it continues to pop up on lists, but it's been pretty volatile, as you can see. You know, here we had an earnings gap, shot up 25%, a little earnings drift afterwards, came back up, couldn't get past this level. Sellers were looking here. You can actually see over here, they were just, this is where sellers were just, whatever reason, as soon as it get around 36, 37, sellers would come in. Another earnings gap. So you can see that there's been good earnings surprises with this stock. Again, just couldn't hold up there, came back down to the 50, that's this red line, back up to that same thing, couldn't get past that, broke down, came ripping back up. It wasn't on earnings, I'm not quite sure, but this was very high volume. That's what this little parachute means, the largest volume since the base. And look what's happening now, though, is that you can see here, a few days to this level, couldn't hold. A few days here, couldn't hold. Okay, now we made a new level. Came back up 1 or 2 days, couldn't hold. Now we got a bunch of days we're holding up even above this 41. We're in the, we're about the same, 41.80 or so. But we're starting to hold here. So that's why we're watching it. RS is 98. So this stock is doing really nicely. Let's look at a weekly. Same thing, it's been a little choppy trader, but it does look like in the past it does have a history of making some pretty decent moves. All we can see here, though, is on the downside. But it's also got pretty, the earnings are nothing special. The sales, the earnings are not bad the last 2 quarters. Sales are nothing to write home about. But overall, it's got a very high, when you put everything together, because this is just part of the picture, it's got a 98 out of 99 rating. The growth rate is 58%, which is phenomenal. And you also see here, we're starting to do some breakout years. In 2019, 91 cents for the year. We had a little dip in 2020, which is not unusual, but then we came roaring back at $1.71, then $2.53, $2.62. So this company's growing quickly, and it's starting to be reflected in becoming a leader. So we'll continue to watch that. It's right in the buy zone. It's 41.72. So we're 4 cents above that. It's a little volatile, so you have to be careful with that. I would be, if we buy it, we'll probably buy a little bit smaller position. Next one is Lilly, which we just went over. Then we have Cigna. Again, the next 3 are all healthcare. These are the managed care. Again, industry group 7 out of 197. Again, real kind of volatile stock, and it just popped right back into the buy zone on a gap. So we like to see this kind of tighten up over here, and not just come ripping out, which we'll probably just pass on it, but to kind of maybe even tighten up right below here, give us a nice, maybe a better looking base. This one is almost like it just kind of, the right side just kind of went straight up. So we don't have a lot of symmetry here. We'd like to see much more of a, you can actually see over here, though we can't see the left side, but look at this base here. It kind of took a long time to form. We had a bottom, but then the right side, had some back and forth, and ultimately came up to the top. This is just kind of a little compressed on the right side here. So, but it is one that we're watching because it's in the group, and it does have the look of a leader. Centene, another one, same group. Maybe not as choppy, but again, it gapped up and it's right in the center of the buy zone. So we're going to be just kind of just watching that too. It is buyable, but we much prefer to buy it right coming out. We're already sent into the buy zone, so we'll watch that. The fourth one on our ready list is Humana. We just talked about that. So we're going to go ahead into our watch list. And again, we have McKesson. Unfortunately, McKesson, we got kicked out on this one. I do like this company. Great ratings. It just kind of tightened up here, but unfortunately, the little area broke. We came down, just kicked this up. It gapped down at the open and hit our stop, and of course came ripping right back. That happens. So it's something we can do. But the RS is really nicely outperforming. In the earnings and the fundamental side, really just starting to jump up quite a bit above his historical numbers in the teens. Now we're in the low 20s. Overall, just very strong company. It's a large cap. So, excuse me. It just looks good. So we're looking, hopefully it'll just tighten up again here, even a little bit higher, and sort of cut some of the volatility. The only good thing though is that it's all coming on low volume. So we are hanging around here, but there is some overhead supply. If I just draw, let's draw the line right here. Sorry, it's a little low. I don't think I can move it though. No, our charts don't let them move it. Should have been a little bit higher there, but you can see 1, 2, 3, 4, 5, 6 times it's gotten above this area. It's been kicked down. So formidable sellers here. So even better is it comes up here and forms a tight pattern here. Kind of already getting rid of a lot of these people, and then it forms the path for a run that doesn't have a lot of sellers waiting to take profits or get out. So the next one is Mercury Systems, MRCY. Again, one of the only non-tech stocks, healthcare stock. This is an aerospace and defense. Again, you can see here, this will be sort of an early entry. So we have a base here. It's almost really forming, it's saying a consolidation, but it's really more of a cup. But you can see here, we came down, formed the low, came back up, kind of tested that low at the 200-day. That's this black line. And now we're starting to, sort of form this right side. And this is a nice looking pattern here. And we're looking to buy it, we have it at 60, I'm sorry, I'm looking at the wrong one, 64. So yeah, just right above this guy here, that's 64.43. I think I might actually move it. So it's 64. If we get above there, I'm gonna move this. I think we just in the last day or two, we're gonna move it up. So if it clears all of this area here, be ready to buy. So really, if you're watching this, clear about 64.50 to about 66. If we can get above there, we'll probably have cleared this whole area here, and then we'll be able to form here. And if we do get, without getting kicked out, we probably add to the position coming up here. Now, generally coming in, when you're buying inside of a base, not a true breakout, we tend to buy smaller positions, and then if it's all working out, you would add to the position and create a full position on a breakout over here. But we'll see what happens there. So I will change that after this video is done. And then the last one is AstraZeneca. Again, another medical stock. Now this one has formed a double bottom, and looks like it's forming like a little handle here now. A little volatile, but not too bad. And we had a nice move on Friday. It's got good, excuse me, pretty good earnings and sales, so they have come down in 1 quarter. Margins are increasing quite a bit. That's always like we'd like to see, 4 quarters of that. And they're a UK-based developer of branded prescription therapeutics. So this one, again, it looks like we're just about to go into the buy zone. We closed at 36. Buy zone is 67.55. So there you are. That's all of our stocks that we've got on our list and our portfolio. So, but overall, we're starting to see, with the volatility, we're just starting to see stocks, especially this group, is starting to really show leadership. And we do want to take part in one or two of these stocks if possible, because you always want to catch the leaders. We don't know when a new bull market's going to start. It could be starting right now, starting in a year, no one knows. But even then, the best stocks are already moving up, even within a bear market. And when the bull market starts, sometimes these stocks have already gone up 100%, and then they start their big runs. So we will see. We don't know at this point, but we always try to latch onto the leaders. And again, the way we find the leaders, we're always looking for the highest RS stocks that are outperforming, ideally in strong leading industry groups. In the top, these are all in the top 10, even better, with great fundamentals. So when you put all together, you're in the right place to find the best winners going forward. Okay, so we'll be back next week with another video. Okay, thank you.